Welcome back to Morning Trade Live. Well, we're looking at futures a little bit higher after sell-off late last week in a big way. Now what? As we get close to that opening bell, Mike Block is with us, market strategist, Third Seven Capital. Thank you for being with us. New week, new you. I don't know. I mean, you know, Thursday and Friday were pretty tough, Friday in particular. Was it opportunity? What do you make of this new week ahead?
The thing we really need to do here, Nicole, is really cut out, the paradigms that have worked. This big growth, this big rally, this big momentum, this U.S.-centric stock buying scheme. Maybe seeing a switch here. We look at the European markets up double digits year to date after being left for dead. Big election in Germany that looks like the pragmatists have won. Merz looks like he's ready to lead with a Europe first policy, and that could lead to something new here. We look at these big tech names, and they're hitting a wall. They're not the performers here. There's questions about whether all the spend on AI is needed. Case in point, BABA this morning, has been a high flyer, and I'll get to China in a second. But now we're seeing news that they may be spending $52 billion on new AI infrastructure, and that could be a cause for alarm. And that stock is looking lower even after Morgan Stanley gave it a big upgrade this morning after its big rally that it had already. So there's a lot of questions out there, and I'm starting to look at markets outside of the U.S. I mentioned Europe. I mentioned China briefly, and the Hang Seng is also up double digits. The South Korean market, which had political turmoil at the end of last year, looking a lot better. Here in the U.S., a lot's going to depend upon policy. A lot's going to depend upon what our dual presidents, Trump and Musk, are going to do for us. And the truth of the matter is, there's a lot they can do, and we're going to have to see if they do it. Right now, we're seeing toppy markets. It makes me nervous about the macro, makes me nervous about the U.S. consumer. It's one thing that if Doge is going to eliminate waste in the government, we can all applaud that, but no one's asking the short-term question, what does that mean for jobs? What does that mean for U.S. consumption? What does that mean for the government spending a part of the GDP equation? These are all questions I haven't heard good answers to.
Understood. It seems also, I think there's a lack of clarity. I think with Doge and some of the layoffs, it's likely you're going to see some more unemployment. But really, it's just very unclear here in the near term because even they are working day to day. So I don't know that there is a big picture. I think it starts with sort of weeding out the excess and then dealing with the unemployment after, perhaps. I don't know. I was thinking about Alibaba and the big investment they're making at, with that. And, they say that the clearest positive driver of revenue clearly is the cloud hosting services business that they are investing in. Do you like Chinese stocks overall in general?
Look, a lot's going to depend upon the political situation. I've always been a fan of free and open markets, and that includes having our doors open to China. Now, granted, there has to be proper governance. There has to be proper fairness that goes on. It cannot be one-sided, and if perhaps in the past it's been a little one-sided. I'm optimistic. 52 years ago, or somewhere around there, 4 years ago, the saying became only Nixon can go to China. Maybe only Trump can go to China when he stops engaging in battles with the governor of Maine and everything else that he's doing right now. I think his focus will turn to China. I do think there will be a Trump-Xi summit. And we're going to see what it means for trade. We're going to see what it means for that Chinese economy and how investable it is. We're not going to solve governance issues or concerns that we have overnight, but there's certainly, considering where positioning is, I think we're seeing in stock like BABA a lot of catch-up going on.
We have a lot of details this week. I mean, we have NVIDIA, we have PCE, you have geopolitical events, but I do want to get to the real meat of this, and that is, where are you putting your money to work? I mean, we're wrapping up February, still have a whole year ahead. What do you think would work in an investor's portfolio now?
Looking at what's happening here, these tech stocks have had a big run. I was getting a lot of questions on BABA this morning. Why is it down despite the Morgan Stanley upgrade? And it's like, well, look at a chart. Look how far it's run. There is a story about CapEx, but it's not like things turn on a dime. Like, there's a lot of CapEx. Whoa, let's all sell stock. Well, you sell a stock when it goes from 90 to 130, 140 in a straight line. That's what happens. But in terms of where to go now, I mentioned some things. Europe is starting to look more interesting. Value here in the U.S., but globally. is starting to look more interesting. Your last segment, you pointed out how Warren Buffett, king of value in this era, in most eras, is putting more money to work in Japan. These are all interesting markets. Here in the US, let me paint a picture here. We have that big PCE number on Friday. And again, that's the most exciting number for me because that's a January number. We're going to get a sense of what's going on in January as opposed to more backward-looking numbers from Q4. Now, if that number comes in line, we're going to get this picture where if there are going to be these layoffs, if jobs are going to suffer, it's going to give Jay Powell what he needs in the ammo, and I'm sure there'll be some pressure from the White House to cut rates. It's going to give Congress this impetus to stimulate. And the bond vigilantes are rolling over right now, and they're not happy with what I'm about to say. But if there's more spending that comes, who does that benefit? I look at the Russell 2000, and right now, year to date, that's still lagging here. And there could be great opportunities there if we get the monetary and fiscal stimulus that we're really thinking about and looking for. To me, that's where some exciting opportunities are. If rates come down, there's going to be more M&A, and again, great opportunities in that mid-cap space to think about. You don't have to go chasing NVIDIA or chasing all these other companies. There's going to be great opportunities in the Russell, great opportunities outside of the U.S. And again, maybe only Trump can go to China. I'd love to see it. We'd love to see it happen. Like him, don't like him. He's our president. Let's see what the leadership can do here.
So it sounds like, because I asked you, what do you think works? You came up with a lot of international and a lot of small cap Russell play, right? Because that's down about 11% off the highs. You're staying away from a lot of the tech. NVIDIA might have a lot of volatility this week. If NVIDIA sells off in a big way, do you then consider tech again? By the way, we're up against the opening bell. I might have to interrupt you, but is tech attractive to you when?
I think we need a bigger pullback, and then it's going to be very attractive. That's still where the growth is. Growth has worked. Growth plays. But, short to intermediate term, there's more of an opportunity for smaller caps, more of an opportunity for value, more of an opportunity for non-U.S. Look at the run here. If you pull that chart out further, you'd see how dramatic it is. It's like, oh, it's off its highs. It has room to run. It's like, pull back further. We're going to see. I'm not a big believer that DeepSeek came in and wiped out everything to make it such that that's it. NVIDIA is dead. No more. No one needs Blackwell chips anymore. No, that's not true. Long term, you still want to own these growth stocks. I spend a lot of my time in the private markets, and there's companies there that are very exciting, some of which I think may be better opportunities than some of these public over-traffic companies. Now, you have liquidity here, but again, in private markets, there's some interesting things to do. I'm still a big believer in growth. I'm still a big believer in the United States, but maybe for the next several months, there's an opportunity to maneuver and do something different here.
Yeah, and look, what worked in the last couple of years, we saw 2 great years. What was your favorite last year, and could that be your favorite again this year?
It's possible. I'm saying maybe it's time that we're actually going to see rotation. Again, if we get more aggressive monetary and fiscal policy, ask yourself who's going to benefit. It could be some of these smaller cap companies. So again, that's what I'm thinking about, as long as, there's good solid companies. And again, this may be a bonanza for the mid-cap stock pickers here.
All right. Well, Mike Block, it's been great to see you. Market strategist, Third Seven Capital.